Consumers are about to pay massively more. AI data centers have already driven up the cost of electricity, GPUs, and critical computer parts. Now, PCs and smartphones are next in line. The culprit? A single key component powering the AI boom: high-performance memory. Micron stock sits at the center of this supply squeeze. If you're a smart investor, this is an investment analysis you don't want to miss. High-performance memory, or HBM, is the backbone of AI data centers. Micron is one of the few companies capable of producing this at scale, making it a critical supplier for AI infrastructure worldwide. Unlike the RAM in your PC or smartphone, HBM is designed to handle massive amounts of data at blazing speeds. HBM is stacked memory. It is multiple layers of chips layered on top of each other, giving it a huge capacity and bandwidth. But stacking takes more wafer space than standard memory. When production space is allocated to HBM, less is available for memory used in PCs and smartphones. The result? Prices for critical PC components are already skyrocketing. Gamers Nexus has shown memory prices rising 100 to 150%, and this is just the beginning. Micron has indicated that customers would like to start using LPDDR in AI data centers next. That's low-power RAM, normally reserved for smartphones. If smartphones have to compete with AI workloads for memory, consumer prices could surge even higher. AI data centers are growing faster than the memory supply. HBM chips are in such short supply that orders are almost sold out for 2026, and HBM4 is already planned and being marketed for future AI workloads. So, any talk of AI hitting a wall is premature. The key technology bottleneck, memory, still has years of innovation ahead. Micron sees no end in sight for AI demand, with engineers forecasting 5 to 10 years of product improvements. This focus on AI has serious consequences for PCs and smartphones. Memory shortages will continue to push prices higher. Another key technology, NAND, the storage used in solid-state drives, is also being prioritized for data centers. NAND is what stores your data long-term on smartphones and computers, keeping them fast and responsive. Micron is now shifting its development focus away from consumer products and entirely to data centers, which could mean even higher prices or reduced availability for consumers. As data centers are willing to pay more for memory and storage, consumer markets may get priced out. Cloud dominates today, but rising memory demand could put even more consumer devices at risk. Now that you understand how memory works, why shortages are happening, and how this is driving up PC and smartphone prices, hit like if this changes how you think about tech. Next, let's dive into what this means for Micron financially. At first glance, Micron might look like it's in the driver's seat, powering the AI boom. But the memory business is far from simple. Let's start with revenue. Memory comes in waves. This is the first thing every investor needs to understand. It's an extremely cyclical business. Demand plays a role, but the bigger factor is supply. Memory is hard to innovate on, but once production is figured out, manufacturers scale fast, often overshooting demand. Gross margins remain decent, as we can see in the next graph, but any early lead one company achieves is quickly copied by the other two major producers. Revenue splits, competition rises, and margins eventually compress. But it gets trickier. Memory is extremely capital intensive. Almost every dollar generated is reinvested into production. If we look at cash flow from operations versus capital expenditures, they're almost identical. And since free cash flow is simply operations minus capital expenditures, free cash flow is essentially zero. Accounting profits exist, but actual cash profits? the money investors really care about, are almost non-existent. At first glance, Micron might look like a steal. Its forward PE is just 7.7. That's seemingly cheap compared to the broader market. But there's a catch. We've already seen that Micron spends nearly all of the cash it earns on capital expenditures. The profits we see on the books are largely accounting profits. Real cash? Almost non-existent. For simplicity, let's do a cash flow-based valuation. The most free cash flow Micron has ever generated is just over $8 billion. Let's be generous and give them $9 billion, but assume zero consistent growth, since they've never reliably grown cash beyond capital expenditures. Using a forward price to free cash flow multiple of 8 for a zero growth company, the implied yield is 12.5%. We use this in order to match the market return of 12%. Multiply that by $9 billion in free cash flow, and we get a market cap of $72 billion. Compare that to today's market cap of $332 billion, that's a potential 80% drop. This seems extreme, but it's consistent with history. Micron regularly suffers massive drawdowns, 50% or more, because investors get excited by a low PE or potential growth, only to realize the company rarely produces actual cash. Despite this happening multiple times a decade, investors seem to never learn the lesson. Given everything we've covered, here's how I see it. Micron sits at the heart of the AI memory boom, which is likely to keep demand for HBM and NAND high for years. From a technology standpoint, this is compelling. They're a critical supplier for AI data centers, and memory supply constraints could continue to push PC and smartphone prices higher. But the financial reality is hard to ignore. Free cash flow is nearly zero. The market seems to be pricing in growth that may never materialize. And history shows us Micron can suffer massive drawdowns of 50% or more. My take is this: it's best to avoid Micron stock. There is no real cash flow, and investors need to be careful about betting on a company just because the technology is good and the narrative is interesting. At the end of the day, cash is king, and there's no cash here. This is a classic case where understanding the technology and the financials together informs a nuanced trading decision, rather than just chasing a cheap-looking PE or hype around AI. Now that we have a good understanding of the situation, the technology, and the financials, let's recap the key risks investors should be aware of. The biggest risk is that Micron's business is extremely capital intensive. Nearly all cash is reinvested into memory production, leaving little free cash flow. Accounting profits may look solid, but real cash is minimal, limiting the company's flexibility and making it difficult to turn AI demand into tangible returns. Another major risk is the cyclical nature of the memory industry. Supply and demand swings are extreme, and historically, Micron has suffered massive drawdowns, 50% or more, multiple times a decade. Any perceived advantage, whether from technology or AI demand, can be quickly eroded by competitors like Samsung and SK Hynix, which further pressures margins and revenues. Taken together, these risks highlight why understanding both technology and the financials is crucial. Even though AI demand is real and memory is critical, Micron's fundamentals show that volatility is almost guaranteed, and cash generation may remain limited despite the hype. Micron sits at the heart of the AI boom, and its technology is critical for powering the next generation of AI data centers. But as we've seen, the company's financials tell a very different story. Cash generation is minimal, the business is capital intensive, and the memory industry is notoriously cyclical. Even with soaring AI demand, investors face the risk of massive volatility and limited upside. For consumers, the effects are already clear. PC and smartphone prices are being pushed higher as data centers compete for the same memory supply. For investors, the lesson is simple. Don't be swayed purely by the narrative or the technology. At the end of the day, cash is king, and Micron simply doesn't deliver enough of it to justify the current market valuation. If you're looking to invest in AI, it's crucial to understand the entire ecosystem, from chips to memory to storage, and make decisions based on fundamentals, not hype. Micron may be important for the AI revolution, but as an investor, it remains extremely risky. If you stuck around this long, join me on Discord. I'd love to talk more about investing with you specifically. You clearly enjoy tech investing as much as I do if you watched the whole video. Link in the description. Thanks. Bye.